Have you ever thought about buying gold? I'm talking about those big old-fashioned gold bars that weigh an absolute ton. If you have, this video is for you, and even if not, you might want to seriously consider it. So hit subscribe and let's get started.
Gold's mine. I found it.
And the only question I'm left with is,
how did $17 billion disappear overnight?
What's up guys, I'm Bret and today we're going to be looking into whether now is a good time or not to invest in gold, and if so, how exactly to do it. We're currently living in insanely uncertain times and no one knows what's going to happen to the world economy. And just like in the movie Gold with Matthew McConaughey from 2016, we could see billions wiped off the stock market tomorrow. However, we could just as likely see its post-April rally continue. And that's something that we just don't know, and you're going to have to decide for yourself. Now, I've called this video, Should I Buy Gold Now? And that's dependent on multiple factors, including its behavior in the past and its current value. And that's what we're going to be looking at in this video. If you like this video and you want to see more, please turn that like button blue, show some love and hit subscribe. Now, the price of gold has been increasing over the last year, but especially in the last 2 months. And historical trends show that when the stock market suffers, the price of gold actually increases. As you can see from this graph, during the 2008 financial crisis, when the Dow Jones was down 49%, gold was actually up 34%, which is just crazy. Now, the Dow Jones is one of the most widely followed US stock market indexes that tracks the performance of the 30 biggest American companies. And for those of you in the UK wondering why I'm always talking about the US stock market, that's because it's the one that I'm most heavily invested in at the minute anyway. Now, when I checked out current trends, I found that people's interest in buying stocks right now is incredibly high. However, people's interest in buying gold right now is not seeing the same jump in online searches. And that's probably a really bad thing for my keyword reach, but hey. This is probably caused by all the media attention that Wall Street and the stock market get. But what it could also mean is that not many people are onto the fact that if the stock market does continue to fall, the price of gold is going to increase. Now, this is somewhat dependent on the world economy taking a further hit. And not that I'm a betting man, but if I was, I'd be willing to bet that in the next year or so, the world economy might see another recession. So there's only so much that governments can prop up countries and keep injecting mind-blowing amounts of cash. And I really hope that what is happening in the US with stimulus injections and in the UK with the furloughing system helps our economies. However, I think it's only going to do that. I think it's only going to help reduce or delay an impending recession, but I don't think it's going to stop it completely. Now, that's just my opinion. That's just what I think. Let me know what you think down in the comments. So if you think that government spending is too high, they're going to rack up too much debt and interest rates are too low, these are all reasons that potentially the stock market may suffer and gold may be a good thing to invest in. But that's something, like I said, you're going to have to decide. So you've seen the relationship between gold and the stock market. So I just want to clarify that if you do decide to buy gold, what you're doing is basically betting against the stock market and betting against the government strategies or the governments that are trying to prop up the stock market. Now that we know that, let's move on to how we actually would buy gold if we decide to do so. So how do you actually buy gold anyway? Are we talking about buying tons of gold online and having it delivered to you by Amazon? Are we talking about buying mining companies stock? Or are we talking about buying an ETF? These are the 3 ways that we're going to look at next. You can buy gold all 3 of these ways. And whilst owning the physical metal might make you feel like a king and reduce any risks associated with ETFs and stocks, the chances are if you buy the physical product, the physical metal, gold, you're going to be paying a premium to at least cover all expenses involved in the transaction. And depending on where you're buying it from, chances are someone's going to want to profit from your sale as well. So for that reason, and although it'd be really nice to have a load of gold stashed under your mattress, it's not the most viable option. And since gold is really expensive in relation to its size, you'd probably be super disappointed in the size of your delivery. Buying individual mining stocks is another way to get into the gold market. However, be aware that by buying an individual stock, the performance of that stock is largely based upon their individual operating performance. And basically what I mean by this is you're going to be buying into a company, not a commodity, so you're going to have to be aware of all the company's structural risks. And what I mean by this is that even when you put the price of gold aside, things that could affect the company's worth. These risks involve location or specific mining difficulties, infrastructure, including water and energy, as well as individual operating complexities such as logistics. For all of these reasons, it's more likely that if you buy an individual mining stock, it will more mirror the Dow Jones compared to if you buy the physical metal or if you buy an ETF. Having said that, and as well as the potential downsides, buying into an individual company can open you up to increased growth if you buy a good company at a good price with good financials and track record over time. Lastly, and in my opinion, the best way to invest in gold would be through an ETF. An ETF is a fund that owns and tracks the value of an underlying asset that ETF is based on. So in this case, gold. Now ETFs trade on the open market, so they're easily acquired through a stocks and shares ISA or your trading account. Now buying it this way, you're way more likely to get it at its actual value, and you don't have to worry about finding a reputable dealer either. The largest and most well-known gold ETF is the GLD. Now this is traded on the US market, but as you'll know if you watched any of my other videos, I mostly trade on the US market, so this is what I'm most familiar with and where I prefer to do my trading. Now, let's summarize the advantages and disadvantages of all three of these options side by side. So investment limits then. For physical gold, there is no limit. For bullion mining stock, there's usually a $1 or £1 limit depending on the trading account that you use. For an ETF, there's usually a minimum of 1 gram. Now for security, physical gold involves a very high risk of theft. For a mining stock, we're looking at a medium risk. And for an ETF, a very low risk of theft. Thirdly then, can it be used as collateral for a loan? Physical gold is the only one here where you can actually use it as collateral for a loan. A mining stock or an ETF cannot be used against a loan. Is it tradable? Physical gold, yes, it is tradable, but it's conditional and you're going to have to find a buyer. For an individual mining stock or an ETF, yes, they are both tradable. However, note that there's usually a charge for every exchange depending on who your account is with, so bear that in mind. Purity of gold then. For physical gold, this is a big risk and you need to make sure that you find a reputable buyer. For mining stock, this is low risk, and for an ETF, this is a very low risk. Individual storage costs. Yes, with physical gold, there is an individual storage cost. However, with a mining stock and an ETF, there is not. It's already priced into the stock that you're buying and there's no individual cost to you. So which you buy is really based on you as an individual. If you're the sort of person who sleeps with loads of cash under your mattress, you probably sleep better knowing that your gold is under your mattress as well. However, if you're familiar with the stock market and you're okay with the ups and downs that can bring, I'd say that an ETF is probably the best choice for you. Taking a step back to consider whether now really is a good time to invest in gold. If I was you and you're not too familiar with the stock market, I would definitely put a small percentage of your money into gold, and this is to diversify your portfolio against the risk of the current uncertainties of the stock market. Having said that, the stock market does have a tendency to recover from recessions. So if you're able to continue to hold your investments which you currently have in the stock market, and or maybe you don't have any, I would still say if you're able to invest with a 5 or more year plan, investing your money onto the stock market with individual companies is still the best option. And if the stock market doesn't see another decline and we continue to see governments successfully propping up our economies, then the price of gold, if it increases at all or even more, is going to be temporary. So keep an eye on these policies and keep an eye on the US elections, which I truly believe are going to have a big part to play here as well. Said that very fast, didn't I? Truly going to believe how big... That is it, guys. I hope this video helped you decide whether or not now is the right time to invest in gold, whether it's right for you or not. And yeah, let me know in the comments whether you're going to be investing in gold or not in 2020. I'd love to hear from you. Oh yeah, and make sure you subscribe, guys. Hit the like button. See you next time.